Welcome to USGFX Daily Video. Before we begin, I'd just like to make a note that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Clayton and thank you very much for joining me. The dollar index overnight posts a long-legged doji. Now still, this undefeatable level 95 figure is still taking on a very heavy challenge, but holding. The market at present is still questionable whether we can still break above this level. It is therefore suggested that towards 114.85 on the euro may hold as a short-term base while the market determines whether, if it can, see the dollar index rally further. I am at this stage looking to sell into any rallies on the euro if the opportunity arises towards 116.75. It is assessed that the market should eventually break through the 114.85 and take on the challenge down towards 112.85. What it would seem that the RBA Governor Philip Lowe has kept to the old age script, after saying yesterday in a speech the next move will be up, not down, in interest rates. Nevertheless, he still feels the best course of action for the Reserve Bank of Australia is to keep rates at presently record lows, around 1.5%. I still feel that the market, in terms of the US, will look towards September and December as two rate hikes of 25 basis points. This will in turn put some pressure on the RBA and may see one 25 basis point hike very, very soon this year. Looking at the Australian dollar, though, the market is still loitering around the 74 cents and still finding a cap around 74.55.65, with the 60-day moving average above at 74.60. With the price action over the last 3 days, although bullish candles are in play, the market still hasn't been able to take on the challenge to the upside. There's still lacking momentum. I feel the market will eventually turn back towards the support at 73.80 and then lower to eventually take on the challenge to the objective that's still exposed at 72.55.65. It is a little bit disappointing that the support at this stage hasn't gathered momentum from 110.75 as we contested and nearly through this level of this uptrend support. Is that stop losses should be placed accordingly. Now mine is placed around 110.38 roughly, and therefore I do expect to see, if it does fall, I'll be taken out and most likely find the base around 110.15.25 to be contested. Reassess from there, because if we do get a rebound from there, I'll be looking to buy the market as a rally could see a rise up towards 112.50. What has put a little bit of a dent to dollar yen, or yen strength more to the fact, is overnight the Trump administration hit Russia with new sanctions overnight, punishing President Vladimir Putin's government for using chemical weapons against an ex-spy in Britain, US officials said overnight. But we still got this week to come. The market will be paying attention tonight to the inflationary figures. First of all, with the PPI out tonight and the consumer price index at the end of the week. Headline inflation is forecasted to inch up slightly to 3%, while core inflation is expected to hold around about 2.3%, above the Fed's 2% objective. This is why I feel the market will eventually see the Fed hike twice this year, as I say, in September and December. The pound reaches its objective after picking off the supports in the last few days. Now challenges the 128.40.60 area. It is assessed that the pound needs to now, in the next 12 hours, rebound. Otherwise, we could be seeing weaker into the price action and not looking at 128, but down towards 126.60. With the concerns of a hard Brexit, when it divorces the EU in March 2019, we did have recently the UK Secretary of State International Trade, Liam Fox, saying that the high chances of a no-deal resulting for Britain's negotiations to exit from the EU was quite high. Moreover, though, the Bank of England, Mark Carney, also warned recently about the effects of a no-Brexit deal, referring to the chances of that happening as uncomfortably high. This has put weight on the pound, and as I say, while we continue to get negative vibes about the Brexit And if we do get a hard landing, then the pound could easily be looking at not 126 but 120. Even though we are considerably oversold, I'll be looking to see rallies towards 129 as an opportunity to sell. Gold hasn't really moved anywhere in the last 12 to 24 hours and still maintains above the 1,200 mark. I am still looking towards 1,180 as a potential buy zone and seeing a recovery eventually, due to the fact that we are extremely oversold on the weeklies and also on the dailies with some divergence, and also the 50 midway point on the RSI is coming through a little bit. Therefore, we could see a pop to the upside and bring in a target for gold around 19 to 26. Finishing off with oil, the market plummeted overnight and reaches its objective of $66 a barrel after falling 3.5%. It is concerned at the fact that the market is still looking very negative. And if we break 66 in the next 12 hours, then we could be looking down towards $62 a barrel, which I'm still in favor of seeing. Any rallies should find resistance around $67.5 to $68 a barrel. Well, that wraps up for today. Thank you very much for joining me. But please join me this afternoon at 3 p.m. for the USGFX Traders Club Masterclass, where I'll be talking about the economic calendar, potential trades, and possibly one or two indicators that still puzzle some people to use. And that's one of them, the MACD. So please join me at 3 p.m. today. Thank you again, and I hope you enjoy the rest of the day.